Hello and welcome greeting from Frankfurt Main Tower. This is Hellerbar's quarterly update. My name is Thomas Kors. I'm in charge of the financial institutions business at the bank, and I brought with me Matthias Melms, who's in charge of DCM and syndicate. Now, basically, what did we have in this current quarter? A lot of interesting stories, a lot of negative stories, not enough new deals, unfortunately, but in our favorite segment in covered bond markets, we are seeing some developments that actually make our job a little bit more interesting again. So, Matthias, let's have the highlights.
Yeah, Thomas, we still have the inversion of the swap curve. As you can see, meanwhile, we have approached levels of around 4% in yields in the short end. What is new and what has changed is that we have also seen increase in the mid and the long end of the curve. So the inversion is less steep than it was before, but still it is there, and investor asked for compensation. And that has certain consequences of the maturity of the covered bond deals. As you can see, that we have a strong focus this year on maturities up to 5 years, and especially in the segment up to 3 years, we have a market share of roughly 30%, and this is we haven't had that for a really long time.
Yeah, about 10 years according to this. Doesn't look like it's ever been that high. But why is that? I mean, why don't we see the long end coming at the moment?
We have a lack of issuance there because covered bonds as a product can't compensate for the spread that is needed to compensate the inversion of the curve and what investors are asking for. I don't see that is possible at the moment to pay as high spreads. So with the consequences that we are having a spread widening in the market, more or less.
And who widens most?
We have a new situation, to have to say that while we have a spread compression for at least the last 9 years when the ECB was with CBP3 active in the market, spreads compressed. What we now see is since the ECB has left the market, we have wider levels for non-core products, and we now see a spread adjustment from core products to the upper level.
So basically what that means is German Pfandbriefe are getting cheaper and cheaper in terms of spread, at least. They have to pay more and more. And the others are sort of leveling out at the current levels, or?
Non-cores are relatively stable, so where we see the widening is in the core products.
Okay, well, I guess thanks to the European directive, investors now have a much easier way of choosing without having to go too much into detailed analysis. Is that a factor in your view?
This is at least something we often hear as a feedback from investors that since the EU directive is in place, the view on different jurisdictions have changed. We have a EU regulation in the covered bond market, and investor perception is that the differentiations that we had in the past and that we are still having are not as huge as they were.
Well, despite all of these factors, I think it's still remarkable that we're approaching 200 billion in total issuance. So the market seems to be still pretty healthy. Do you think that when we go forward, this will remain a market that's focusing on issuing windows? Because that would be great for us, wouldn't it?
When you look especially on the time after the summer break, September and also October, you see a huge difference between the volume that we are observing this year and that we have seen the years before. So for the last 7 weeks, we have seen more than 20 billion less issuance activity than in 22. So, and we have seen normally in September issuance every week. We have had in September at least 2 weeks where we see no issuance. So it is
in
more
euro covered.
In euro covered, of course, in euro covered. So it is becoming much more important to analyze really clearly and precise the opportunities to go to the market, because as we speak, not every day is a good day for issuance.
The better for our job. So, but apart from covereds, is the situation much different in senior?
We have a different situation in seniors. We have at the moment the highest issuance volume that we have for the last years. The main driver was especially January, because we have a lot of banks in Southern Europe that still have to issue because of the MREL requirements, and from the seasonality you don't see any big difference to the years before. So seniors are paying a much higher spreads than covered, and these higher spreads are compensating investors for the inversion of the curve, and this is the reason why we have still ongoing issuance there.
So senior pref is business as usual the way it looks. Is that the same for senior non-pref?
Senior non-pref we have a good year in senior non-pref, I have to say. We have not as much as last year. It seems to be that we are not taking out new records. We have no difference in issuance activity over the several months, but what we have is less activity from US banks. So we're talking about around 15 billion euros lower issuance volume from US banks in euro than we had in the last years.
And why is that?
So I think there has nothing to do with the banking crisis that we have seen in the first quarter. It's more of the euro-dollar basis that is not compensating US banks enough to issue in euro, so they focus more on US dollar issuance.
Okay, well, that's understandable. Now, outside that region, there's another, of course, high-grade product that we take care of. That's the SSA sector. What's the story there?
So, interesting development that we have in the SSA sector. So, we are turning back to pre-corona level. You see that here that we have the lowest issuance for the last 4 years in 23. We are not on the levels from 18 and 19, but the whole development is overwhelming by the huge issuer EU with the introduction of Next Gen EU program that alone is responsible for roughly 130 to 140 billion this year.
Intuitively thinking, I would have expected that to be a much bigger line here because of exactly that. Yeah. But interesting to see that the facts don't match that. What about our more important subgroup of that sector, the German federal states?
Exactly here, you see the impact of the lower issuance volume that we have in this year. So we are nearly in the lender segment, nearly on the levels from 2018 and 2019, far away from the high issuance volume that we have seen under Corona.
Wow, and this is even though the federal debt stop that had been imposed in between was softened for a while during the pandemic, but that's going to come back next year. Oh, actually, it's already back now, I think. And so that should also put a further stop there. So this line is probably likely to only work like this.
Exactly.
Okay. Well, okay. Now, what else do we expect for the rest of the year to drive the markets, Matthias?
So, what will be the volatility drivers for the coming months? I think it is important to understand that the war that we have meanwhile in the Middle East is more bad situation that harms the sentiment. What we are not seeing at the moment is an impact on macro factors, and we still think that the impact on macro factors will be limited as long as we manage to have the oil price on a level below $100 per barrel. We have the ongoing war in Ukraine. That could be a volatility driver next year, maybe when we have hopefully peace talks and we are talking about limiting the sanction of Russian oil and gas. That could lead to a pressure on oil prices and then support economy. What we are not seeing for 24 is inflation as a driver of volatility. We think that we have seen the peak, or that we are close to the peak of central bank hikes, and we also expect that we talk in the second half of 24 about maybe lowering the interest rates.
What we're also not seeing, thank God, is another epidemic here right now. So let's hope that's not going to be the case. And of course, you see the deteriorating macro environment. That's been a talk all year long: soft landing, hard landing, no landing. So that's going to apparently also put some pressure on volatility going forward.
Exactly.
Thank you very much, Matthias, for that wonderful summary. I think you can sum that up also with just basically 2 words. It's the waiting game that's being played by investors. It's being played by issuers, and it's increasingly also played by central banks. So you just wait and see how the market develops, wait and see what the data sets that are coming in are revealing, and adjust your behavior accordingly. So it's likely to stay still rather interesting, as the Chinese would say, interesting times. We're going to be with you. I hope you're going to watch us again. Thank you very much for joining today. Thank you, Matthias. I'm Thomas. This was Helaba. Have a good time. Bye-bye.